There's a saying in the real estate industry that all real estate is local, and that is the very reason that we cannot rely only on national level housing statistics to give us the complete picture of where the housing market is headed this year. The national level statistics are somewhat of a lagging indicator about what is happening in the housing market. But if we look at the leading regional markets, we can get an early warning on what is over the horizon. In today's video, we're going to be looking at the Austin, Texas real estate market, which I identified as one of the most critical markets to watch for signs of a housing market crash. Let's get into it. Back in February, I released our updated list of the hottest markets to watch in 2022 for signs of a real estate crash, and the Austin, Texas metropolitan area ranked #1 on that list, and for good reason. It's got a lot going for it. If you want to know all the factors that went into determining our list of the top markets to watch, make sure to check out that video. I'll leave a link to it in the description down below. One of the big draws of the Austin, Texas market is that it is a major hub for the technology industry in the United States. And some say it now rivals Silicon Valley in the San Francisco Bay Area. In the midst of the pandemic, when the work from home trend really took off, we saw a lot of major relocations by companies and employees. Tesla officially moved their headquarters there in 2021, and Oracle moved its headquarters to Austin in 2020. These are two big tech names making the switch to Austin, Texas from Silicon Valley and California. But it wasn't just the pandemic that pushed big name tech companies to Austin. Apple, for example, had already planned and broken ground on a new campus in the city of Austin that cost $1 billion and will initially have 5,000 employees. Another attractive option in Texas is that there's no state income tax, a very nice perk to folks in high-income industries like tech. Housing affordability is also much better in Austin compared to an area like Silicon Valley. According to the data from Redfin, a national real estate brokerage, the median home price in the Austin, Texas metropolitan area was $500,000 in February 2022. Compare that with a median price of $1,450,000 in the San Jose metropolitan area where Silicon Valley is located. And you can see another reason why Austin would be so attractive to relocate to. Now, there are many more things about Austin, Texas that are great, but I'll stop here before I start sounding like someone from the Austin Visitors Bureau. I'm not trying to sell it to you so you can move there, just making a case for why there are some really strong fundamentals behind the growth of Austin's housing market, and that the performance we've seen there isn't purely the result of a speculative real estate bubble. So here's what we're going to do for the rest of this video. I'm going to give a high-level summary of my deep dive into the Austin housing market data and where it looks like it's heading from here. And then for everyone who wants to see that detailed breakdown of the data, I'll walk you through the local housing statistics and explain how I arrived at my conclusions. So here's the high-level overview for the Austin housing market. Median home prices surged 26% in February 2022 compared to the same time a year prior. And since the beginning of the pandemic, prices have increased by 61.2%, vastly outpacing national price growth and the average growth in our top 20 markets. There's a reason this market was the top of our list. Demand has been robust, with sales levels averaging over pre-pandemic levels for the last 2 years, and the intensity of demand has been clear as homes have been selling above list price and staying on the market for a shorter period of time. Supply has been very tight as new listings have trended lower and inventories are at record lows. But what we really want to look at is affordability and ask ourselves, have prices gone up so high that they're at a point where they need to come back down? After running the number, my answer to that is yes and no. Now bear with me here, I'll explain. The underlying fundamentals in the Austin market make it a somewhat of a special case. When I calculate the average home price as a share of income, it's at 32%. as of February, just like the US overall, and the upper limit on that metric has historically been 35%. So by that metric alone, I would argue that Austin prices are reaching the peak of what the market will bear. On the other hand, Austin has attracted a lot of out-of-town attention, especially from folks in Silicon Valley in the San Francisco Bay Area. And when we factor in the higher income level of potential Austin homeowners from there, the affordability gets dramatically better. As mentioned previously, the median home price in Austin was $500,000 in February compared to $1.45 million for the San Jose metropolitan area. And incomes are also very different in the two areas. About $80,000 in Austin compared to just over $130,000 in San Jose, according to 2019 Census Bureau data. Now, if we calculate the affordability based on San Jose income, that ratio gets to 20%. Now, obviously, not all home buyers in Austin are from out of town, but because there is the strong possibility for home buyers from higher income areas to come into the market, the affordability analysis changes. At this point, I would say that the Austin market is further away from its own housing crash than the nation overall, based on what we're seeing in the national level statistics. And it is because of the attention of high income buyers Austin has attracted over the years, due in large part to the presence of the booming tech industry in the area. So that's the high level overview. If you don't want to stick around for a deeper dive into the data, please give this video a thumbs up to support the channel. It is greatly appreciated. I'll be doing more regional analyses on our markets in the top 20 list. So if you want to see more of these types of regional analysis videos, make sure you're subscribed. Hit that notification bell down below so you know right away when those videos come out. If you're new to the channel, don't forget to check out our other videos that are looking at the timing of when we could see a crash in the overall housing market and by how much. For everyone else sticking around, let's get into the charts. As mentioned, the median home price has increased by 26% from February 2021 to February 2022, going from $405,000 to $510,000 on a seasonally adjusted basis. And while this may sound like a high rate of growth, and it is, it pales in comparison to the 40+% year-over-year growth seen in the second quarter of 2021, and price growth has been above 10% every month since September of 2020. There's definitely a reason this market made it into the #1 spot in our markets to watch in 2022. We can't expect that kind of growth to last into perpetuity, and we are seeing a downtrend towards more historical levels. But just remember that a slowdown in growth and a decline in prices are not the same thing. Looking at the demand side of the market, home sales have kept above pre-pandemic levels for most of the last 2 years. There was a slight tick down in February, but this is tied more to supply than demand, as home buyers have maintained the intensity of their offers. The sales to list price ratio remains above 100% and even appears to be starting a new uptrend after signs of a slowdown in 2021. The average days on market has also been indicating strong demand as it continues to edge lower. On the supply side, it remains tight and is getting tighter. The current inventory of active listings is the lowest it's been in the data Redfin makes available. And combine that with the current pace of sales, and there is just over 1 month's supply of homes on the market. And we're not seeing a lot more coming online either, as new listings have been trending lower for the last several months. So demand is high, supply is low. It's a familiar story and a surefire recipe for high prices in any market. But the real question here is, have prices been pushed so high that they no longer make sense? Let's look at just where the affordability level is right now. Using income data from the Census Bureau, as well as our home prices from Redfin and mortgage rates from Freddie Mac, I've calculated the average housing payment in Austin to be 32% of income as of February 2022. You can see here that this level is way beyond where it was at the peak during the last housing bubble or anywhere in its recent history. And now it is bumping up against that 35% threshold that I've found to be an upper limit at the national level. But let's not forget that we've seen a lot of interest in Austin housing from people outside the area, and especially in the San Francisco Bay Area. Just look at this map from Redfin. As of February 2022, nearly 20% of people moving into Austin came from the Bay Area. To illustrate the kind of effect this can have on the affordability for those coming from a higher income area, I'm going to plug in the San Jose median household income to show you the difference. It changes things a lot. For folks coming from the San Jose metropolitan area, on average, they're going to see their housing payment get to just 20% of their income, substantially below the ratio for Austin households. Now, obviously, not everyone buying a home in Austin is a high-income tech employee from Silicon Valley, but it does add another dimension to the analysis that has to be considered. If that factor were not present, I would say that Austin is heading in much the same direction as the nation overall, and that homes are becoming just too unaffordable. As mortgage rates rise further, prices would have to come down. But as I've demonstrated, it's not that straightforward. One of the reasons I'm doing these regional analyses is because we can't look only at national level statistics. You have to look at these regional markets to get a good sense of the underlying trend that might not be apparent in the aggregate data. But from what I'm seeing here, Austin, Texas is not currently the market that's going to start things off for a crash in the nation overall. I'll be doing more regional analyses in the weeks and months to come for the markets on my top 20 list to watch. So make sure you're subscribed, hit that notification bell down below so you know right away when those videos come out. And if you could also please give this video a thumbs up and share it with others on social media, it would be greatly appreciated. It helps us in that YouTube algorithm and supports the growth of the channel so I can continue to bring this content to you. Thanks for stopping by. I'll see you in the next video.